JJ, the CPA is here. Let's go, let's go. Yeah. Money, 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 money. You know what it be. Tell them all I do is work, cause money never sleep. Yeah. You never met a CPA quite like me. Nah.
Want to address some very important things today, some things that I think are going to happen, things we want to be prepared for, some things I want you to be telling your friends about, because it seems like there's some rumors going around as it relates to some tax credits out there, and I want you to be very serious about your understanding related to this. But we've got some Q&A, those that have left some great questions in the comments that I've brought today. I also want to tell you about some things you want to be preparing for on the retirement, as well as some other issues that I think would be helpful as we go into year-end planning with some of the videos that I've been putting out. But here we go. This is JJ, the CPA Small Business Toolbox.
The combination to money making, we got this. JJ, the CPA, is the master locksmith.
All right. Well, I know we've got some people here live today here with us. I want to give a few shout outs for those that are leaving wonderful comments. It keeps me going between these lives, which I know I haven't been live in a while. Of course, without it going, without saying, we always appreciate CSR, always first on, first thumbs up, Tool Daddy and With Flying Colors, Rob and Glenda, Dax the CPA, Jim H, Joe Accountant. Stephanie R left a nice comment on the post that I made about Coach's Pit Barbecue. He's a veteran. We recently celebrated Veterans Day here. Everybody knows that. And then Skogile, anyways, and Carol T. So appreciate you all, and thanks for being here. What I do want us to start with is I heard something, because I want to kind of start positive. I came across just the other day another YouTuber, and check out their channel. It's right there in the banner, and it's the first one in the banner. All right. So I want you to check out Black Queen Wealth. And she had said something that was really profound in one of her short YouTube videos. And what she had said was that generational wealth starts with knowledge. And so it can start with us. And so the more knowledgeable we are, then the next generation, our generation, as in your direct generation, is going to be that much more knowledgeable, which then leads to wealth. And of course, wealth is defined in so many different ways. But I was like, I never heard of something like that. Being a numbers guy, a CPA, dealing with money all the time, from my perspective, I feel as though we have a tremendous amount of focus in on wealth. Obviously, I'm probably an example of, materialistic wealth is what we're talking about. But that was really a profound statement. So check out Black Queen Wealth. She's got some neat videos that I think you will enjoy. I am going to be addressing a few things, but I did really want to make sure everybody's aware that the EIDL payments are coming due. Now, I've had a few that said, well, some didn't get this until 2021. That is true, but many got that economic injury disaster loan in the earliest part of the pandemic, so April of 2020. But there is a 30-month deferment related to this. So your payments are deferred for 30 months. Interest does accrue while it's in essence in deferment. But once your payments come due, you got to make sure that you're staying on top of it. One of the things you want to do now, regardless of when you got the loan, is get onto the SBA website and put yourself in a position to set up the new portal, because the portal that you used to get the EIDL no longer exists. So set up the SBA portal, which then will lead you to set up a secondary portal with U.S. Treasury. And that's actually then where you make your payments. So what you want to avoid is oh goodness, I've defaulted, or oh gosh, I'm just got a call from the bank. They're not going to renew my line of credit because I'm now in default on my SBA loan. And it's uncertain how the SBA will be reminding you of this. Regardless of that, of course, want to make sure you're not missing it. So it's 30 months from when you got your disbursement. But for those that got in the earliest parts, that is starting now. A couple other videos that I've got coming out here. One is on retirement, and try to do some funnies on some thumbnails, if you will. But here's the maximums that you can deduct for 2022. What's key here, and I talk about it in the video, is that for that simple plan and the 401k, you got to make sure that you are withholding those amounts by the end of the year, because you can't make that up once the year closes. Now, of course, with the IRA, the Roth, and the traditional, as well as the SEP, you can do those next year. Now, here's the amounts for 2023. The IRS just told us this here recently, and everything went up. So the Roth and the traditional IRA, the simple, the 401k, the SEP, they all went up for 2023, as well as the catch-up amounts, other than for the IRA, all went up as well. Look at that 401k, you can put in up to $30,000. So with that being said, what we want to be sure is that right now, make sure you're maxing out for your retirement this year. And then at the same time, set yourself up to start withholding more when you get into next year. Here's the thing I want you to remember is you're never going to be able to set aside enough for retirement based on those dollar amounts. They may feel like a lot. I get it. It may pinch when those dollars are coming out, but those dollar amounts don't set you up for a carefree retirement, meaning many put themselves in positions where they find excuses, other things they got to spend their money on. But check out that video there where I address this and kind of walk you through some details. Pull up that one again real quick. On this one here, you'll find in the body of this video a link to the playlist that's just for you that are part of the Small Business Toolbox. So you'll see that in the videos that I'm referencing to you. I've put them in that playlist, that you have a simple way to go to that. And I will tell you this, there's a couple of videos that are in there that I haven't even released, that you would be able to get those ahead of time. Now, also, I put out some videos talking about LLCs, one of which is how to go about it properly. I put together this structure that I go through in this video. And we did have a premiere last night, thanks to those that were there. And let me show you a little bit of this video on this premiere here, because when we're now talking about this setup, let me show you a little bit of what you're going to see in that video. If you are in the real estate business, whether commercial or residential or flipping, how we structure them overall. But what I want to focus in on is the real estate here. So when we are talking about the real estate, for those of you that just want to see the end result, this is what I'm getting ready to go over. So with that, having a little fun. I've been out at my friend's ranch and really have enjoyed that. Honored to be out there. It's a multi-generation ranch in Western Oklahoma. That's where I was then. But really what this comes down to is that I want to make sure you're aware of the fact that I am putting out these other videos that are covering these other issues. Let me tell you a couple of more, and then I want to get to our topic at hand. And so if we look at some other videos, I've got how to really make sure, yeah, look at that. That's a sexy woman right there. That's my fiance, me and Amanda with downtown Oklahoma City. But sexy real estate tax depreciation, well, that doesn't sound very sexy, but what we're talking about there is how to go about with your real estate to make sure you're maxing out your depreciation, or how to ensure that you're limiting it properly. Also, I want you to know that I've got another video related to retirement. I've got another video about the LLC, the ultimate LLC. Which one do you pick? Do you do the red or the blue pill, so to speak, where I walk you through this breakdown? I've got this chart that breaks down the different ways that we can go about it. So now what is it that we're going to be talking about, right? What's the emergency? What's the 911? Well, the emergency in the 911 is that there seems to be a massive push towards people getting an increase in the number of calls related to the employee retention tax credit. Now, I want you to be mindful of this. I don't want this to happen to you, and I'm being serious. I don't want this to happen to you. Up. So if you, click on that one. So I don't want this to happen to you. First of all, I don't want you to get an IRS audit, and I certainly don't want you to end up in cuffs. Check out this next one. I don't want you to get busted. I don't want you to be in the lineup. I don't want you to be a jailbird. I don't want you to fall for ERTC lies. We have promoters out there, and they're lying to you. Let me tell you, the first lie is that there is no new tax law, okay? There's no new tax law related to the ERTC. Let me just show you here, though, recently, and I'm actually glad for this, but recently, here's something that somebody sent me that I want you to check out, because this is an actual IRS raid, and they're going to continue, and I'm going to tell you why. But check this out. This is something here that is really eye-opening.
Work from your workspace. We'll be able to collect your things, your personal items, and once you leave, we cannot allow you back until we're done with our search warrant.
And your managers will communicate when we're done and when you guys can come back.
And you did tell us that you could take our computers with us, right?
If you'd like to take your computers, take your computers. But then again, you will not be able to access the server from your computers over, this time period. So if your computer helps you, take it. If it doesn't, up to you.
So what I want you to be mindful of is the U.S. Department of Treasury, right? That's in essence the part of the government where all the money comes to and all the money is spent, which then that includes the IRS, it includes the Secret Service. Of course, our U.S. government has the FBI, but there's a lot of joint effort going on. Number of things that are going on right now. The Department of Treasury did a study. They released it here recently, and they did a sampling. This really is going to tell you how serious the IRS is going to get about this. And it's going to be your friends and your neighbors, because I'm getting clients that are calling me and they're saying, hey, my friend, my neighbor, someone I work with, somebody that owns a business like mine told me that they got this. I had a client call me after I posted one of my videos. I talked to them early or late last week, and they were getting ready to submit $1 million claim. When we looked at it, it was absolutely fraudulent. And they were getting ready to pay, I think, about $100,000 fee to get a fraudulent amount. But the U.S. Treasury did a sampling of 11,029 941Xs, which is the form in which you file to request the employee retention tax credit from the IRS. And they equaled, are you ready for this? $2 trillion. $2 trillion on 11,029 941Xs. So I was reading an article related to this, and the IRS, one of the, I guess, managers in potentially the criminal investigative division, I believe, was quoted that they being the IRS, have moved 90% of all IRS auditors to the employee retention tax credit. And in essence, they're going to be reviewing these. Now, here's what I want you to know is that you don't need to be afraid of getting the employee retention tax credit. Go to the brand. What we don't want to have is that because you can do this yourself, okay? Do it yourself, right? I don't want you to be scared, so I brought up a friendly picture here. The next thing I want you to note here is that you do still have plenty of time to get the employee retention tax credit. Here's the due dates that are related to that. I've got a video that you can check out. By the way, I just released a video that tells you how to prepare the Form 941X. It's brief. I have a seminar. You probably know this, that you can go through and get it all by yourself. So what I want you to note here is that you don't need to be afraid of getting the employee retention tax credit. What you need to be afraid of is getting it incorrectly. And when we're talking about these pop-up shops, throw up some of these thumbnails again, Amanda, if you would, because right here, when we're talking about the ERTC, like I'm talking about the ERTC thumbnails that have people in a mask or in the audit or getting busted. The new tax law, as you can tell, when I'm putting together these thumbnails, I'm really trying to send a message to you or those that are listening that this is serious, serious stuff. So here's why it's so serious. You or your client, or more importantly, the employer is the one holding the bag. You're holding the bag. So it doesn't matter if you say, well, somebody called and I felt like they knew what they were talking about, so I went with it and we filed for this 941X and I got this credit. Even if the IRS doesn't say, well, you're going to go to jail over it, what they're going to say is, well, you may need to pay it back if you qualified incorrectly. And you're going to owe penalties and interest. It's not a, oh, shoot, shucks, you're right. Oh, gosh, I didn't realize I didn't qualify. This thing seems so complicated. I just wasn't aware. And so I'll go ahead and pay it back. But the IRS will say, okay, we may buy all of that, but you're still going to pay penalties and interest related to that. So if you suspect these scamsters, there's a way that the IRS allows you to report this. There's a form in the banners. There's a form that you're able to file top, and you're able to file a form here. So there's a form, maybe it's at the bottom down there. Okay, there we go. Yep, you got it. So you can file form 3949A or form 14242, the link in the body of this video. It's anonymous. You don't put your information on there. They have a spot where you can, and then you mail it to the division that's in charge of this. Why should you be mindful of doing this? Because if that organization is not doing anything wrong, then they don't have anything to worry about. So anybody that right now is a pop-up shop, I appreciate the fact that you're trying to make a dollar, you're trying to help people, but your pop-up shop is most likely the ones that are going to get looked at. And why is that even known? Well, many don't realize this, but on Form 941X, there's a section where you list the preparer. And if you've hired somebody and they won't allow you to list themselves as a preparer because they say, well, I'm not a tax professional, then your response would be, then why did I hire you? If you're not a tax professional and you're saying to me that I qualify for the ERTC, but then you're saying you can't complete the 941X or you can't put your name on it or you won't sign it, that's your number one. You know that it's a scam, because anybody that's actually properly lined up with the IRS has a preparer tax ID number. It's a PTIN. So on the Form 941X, the entity puts their EIN, their employee identification number. I'm talking about the preparer. And they also put their PTIN. So the IRS is able to track that. So this is going to be the first way that the IRS tracks down whether or not there have been some fraudulent or near fraudulent or those that are qualifying for the ERTC that don't count. So here's the thing I want you to know. In my home state of Oklahoma, okay, so there's two ways to qualify for the Employee Retention Tax Credit. One is that your gross receipts are down. The other is that your business is closed due to governmental order. So in Oklahoma, there have been hundreds of thousands of calls that have been made in the last 30 days to business owners. And many business owners are getting 1 to 2 to 3 to 4 calls. And when I know my clients are calling me and wanting to double check, I know that there's a lot of calls out there. And these calls are being very convincing. So the first thing is that when somebody's cold calling you about anything, why is it that in the past you wouldn't at all take that call? You would look at it as spam or a telemarketer, and you would pass on. But the reasoning is that it has gotten us, this pandemic, in this mindset of, well, there's free money out there. There was PPP, right? There was the grants. The ERTC feels like it's free money. And so no one wants to miss out on that. And if you were closed down or due to governmental order or your gross receipts are down, then you qualify. And it's pretty straightforward. I understand that it does come across as complicated, and I'm not trying to push my seminar, but I'm telling you, in my seminar, you go through it, and once you walk through it, it's pretty simple. Did you qualify or didn't you? Were you an employer? Yes. Did you have W-2? Yes. Were you under a governmental shutdown? No. Okay, well, then you don't qualify. Oh, was your gross receipts down? No. Well, then you don't qualify. End of story. Now, one of the lies that we're hearing is that there's a new tax law. I've got a thumbnail that talks about new tax law here. And when we're talking about this, there is no new tax law. There is no new tax law. What you're hearing from those, and I'm telling you, in the last 7 days, I've heard it at least from 10 clients, and they've all told me the same thing. And I was actually doing a seminar to a wonderful group of enrolled agents here in Oklahoma City. And one of them raised their hand and indicated that, well, wait a minute, I heard that the law changed. And I said, in the last hour? Where? Here's what they're being told, is that in the Inflation Reduction Act, you no longer have to have your gross receipts down. And what they're mutilating here is that in the law of the Infrastructure Act, there was something addressed related to the Employee Retention Tax Credit, but that was in November of 21. So what they're saying is, oh, there was a law change in November. First of all, that's then first sign that somebody either doesn't know what they're talking about, or they're clearly lying, or they're too dumb to get this for you, or they're a scamster, and it's probably all four. With that being said, even that law change that I just referenced to you in November of 21 with the Infrastructure Act, all it indicated is that ERTC ended early unless you're a recovery startup business. It didn't change anything. So when the CARES Act came out in 2020, March 27th, it indicated how you qualify for the ERTC, and that has remained the same. The Appropriations Act that came out at the end of 2020 indicated that you can get PPP and ERTC, and it then extended it, and then the American Rescue Act extended it, but it's never changed the qualifications. One of the biggest lies, if you could pull that one up, one of the biggest lies that we're seeing from these promoters is that they're telling you that if you had a supplier that caused you some disruption to your business, then you qualify. Well, check out that video. I also have one that walks through a number of myths, but that right there is your biggest indicator that they don't know what they're talking about. Because when you're talking about a supplier, first of all, that supplier, this is per IRS Notice 21-20. There's a question and an answer from the IRS. And when you read it, I don't care if you understand tax law or not, when you read it, you would know very simply the only way you would qualify if you had a supplier affected is if that supplier was shut down by governmental order, as in shut down. Number two, that due to the shutdown, they weren't able to get you critical supplies that then caused you to shut down. So you couldn't get printer copier from a supplier or printer paper. Well, if you could get it from another supplier, that's not going to help you. If you're a doctor and you couldn't get gauze or Q-tips or something, that's not going to help you. You have to have a severe effect to your business. So if you do have a supplier and they were under governmental shutdown, and that supplier will put in writing to you that they could not get you what you needed for supplies due to that actual governmental shutdown, meaning it wasn't due to the fact they didn't have it in stock. It wasn't due to the fact that things were delayed getting from overseas. If they would put in writing to you that, yes, due to the governmental shutdown, we were unable to get you these supplies. And by the way, you need to have proof that you ordered the supplies and proof that the supplies didn't come in. And also you need to have proof that you were then shut down yourself. The IRS has put together a nice Q&A on IRS Notice 21-20. All these videos, I reference it. If you go to my webpage, I list all the myths. This is one of them. I give you a link. This isn't an opinion. Listen, if I found there's a way for clients to qualify for the ERTC, I would want them to qualify. But what I want you to note here is that these promoters then say, "Oh, well, I didn't really know. I'm just here to help you. I didn't know." Okay, well, then why are we hiring them? Why are we listening to them? So I get it. It's kind of like the train wreck, or it's kind of like a peep show. Let's just be frank. Okay. It's like, well, I want to look, right? The peep show, your friend comes over and is like, "Oh, you got to see what's in there." Oh, right. Or, oh, well, wait a minute, I'm seeing a business over here and they just got a check for $100,000. Where's mine? Listen, there's nothing wrong with that. Where's mine? Well, did you qualify? Yes or no? Were you shut down to a governmental order? Yes or no? You can Google it. You either were or you weren't. And if you were shut down due to governmental order, well, then you have a chance that you would qualify. Here's the other thing where these promoters are absolutely lying to you is that they indicate that if you qualify due to governmental shutdown, that you qualify for the entire quarter. And this is where you would have to question whether or not they have any education at all. They most likely don't even know how to read English. Okay. And I'm being very serious because the IRS indicates, and I've got it on my website, jjthecpa.com. There's a page that says ERC myths, and I list all the myths, and I give you for every single one of them the link on where to go and read it for yourself. But the IRS says this, and you have to read carefully. And if I say this to you, there's no way you would misunderstand this. Okay. If you are closed due to governmental shutdown, you qualify for the entire quarter, but only the wages that were during the exact days of the governmental shutdown get to be included in the calculation for ERTC. See, if you're so dumb that you don't know how to read and you're so dumb that you don't know how to advise properly, that means that you shouldn't be doing anything related to taxes. So many of these individuals, I'm sure, are wonderful people. And many of them, I'm sure, don't even know. They don't even know they're being dumb. Why don't they know that? Well, because they got hired by a company. And what did the company say? The company said, oh, call people, ask them these questions, and then if they qualify, tell them that they qualify and get them over to this person and they'll take it from there. But in these organizations, there's no way that these organizations don't know when something should be qualifying for ERTC or not, because no one's that dumb. And all of these people know how to read English. So anybody that's indicating to you that they just got ERTC, please do yourself a favor. It's okay to ask them. It's okay to maybe get excited. Maybe you want to know if you qualify. That's okay. But what I want you to ask them is, well, who did this for you? Was it a tax professional? Is it a tax professional that you've been working with? Right? And this is the thing that really kind of surprises me as a CPA, as a tax professional. I know it surprises other CPAs, other EAs, other tax pros is if anybody calls you, right, and they're cold calling you, how many times in the past would you even listen to them for 1 second? The other part is many people, okay, bring up the handcuff picture again. Many people, okay, when they think of the IRS, this is what they think of if the IRS comes knocking on the door, right? So I've had clients in the past that they will get an IRS notice. They'll show up at my office. They will want to see me right away. They're in a pure panic because they got a letter from the IRS and it indicated that they're going to place a levy on their business. And I'm telling you, I don't have the kind of clients that this happens to very often. So I said, well, let me see the letter. It indicates that there's a $72 penalty, as in $72.00. This person's in a panic. They told me they went and hid their car so it wouldn't get repoed. Okay. Now, granted, this was a client's son that was just graduate of college, wasn't really thinking. But most people, when they think of the IRS, they think, I don't want to end up in a lineup. I don't want to be the one that's going to jail. I don't want to be in trouble, right? But then somebody calls you and they say, hey, here's a way to get some free money. Bring that up, busted again. The one that says busted on it. Guess who's going to be standing there? You, not them. You, not them. Your friend, your client, your neighbor, the business owner that you just got the info from. They will be standing there because you have to have intelligence. What the IRS says is, we don't care who you believed. We don't care who you hired. We don't care who you relied on. We don't care if you hired the biggest CPA firm or the biggest EA group in the history of the United States of America. We don't care what you believed. You, employer, you and you alone are responsible for this. You're responsible to ensure that this was done properly. Now, I get it. You can say, well, wait a second. I mean, that's why we hire professionals, right? But anytime I go through anything with clients, we want to make sure that they understand and they agree to make sure that we're doing it properly. So what you need to know is, even if you got scammed, okay, you're double loser in the sense of you're going to have to pay that money back plus penalties and interest, and you're most likely going to be out the fee. Now, I don't mean you're a loser person. I'm just saying loser as in you went in, you got whatever dollar amount, and when you left, you paid double. Because you know what the IRS can do very easily? And this is in normal circumstances, okay? They charge you a 5% underpayment penalty. They charge you a 5% failure to file penalty. They charge you a 5% failure to make a deposit penalty. They have a 25% substantial adjustment penalty. There's interest. And then there's basically something that's called constructive fraud, which means that this was so obvious that you should have known better, that they now can do what's called a 100% penalty. So you can end up owing easily more than 100% back, as in you owe the tax back plus 100%, maybe even more. So you get 100 grand, now you owe 200 grand. And how long is the IRS going to wait for that money? Not very long. You're responsible. These shucksters out here, okay, they're going to be long gone. First of all, they probably don't even have a PTIN. Second of all, you are now in a situation where you might get the audit or the review a year from now, or 2 years from now, or 3 years from now. Okay, now let's just back up for a second. Okay, is there a group out there that's specializing in the employee retention tax credit that is somebody that is reputable? Sure. How would we know they're reputable? What I told you earlier. They're completing your 941X. They are putting their name on as the paid preparer. They are putting their EIN on there. They are putting their PTIN on there, and they're filing it with you. They're signing their name on it with you. That'd be my first indication that probably this is somebody that's aware. The second is they didn't charge you a contingency fee. The IRS under Circular 230 in Section 10.27 indicates you cannot charge a contingency fee unless something is already under audit or challenge. When you file a Form 941X, if you haven't seen it, go to my video. It's in the link here. You only fill out just a few line items. There's no way the IRS knows if that's correct other than they verify you're an employer, that ID number is correct, that you did originally file a 941X. Okay, I'm sorry, original Form 941. They have no way to know if you qualified properly. They have no way to know that your math is correct. They have no way of knowing anything else. There's zero expectation. And the shucksters out there, okay, and I'll tell you what, there's been a couple of shucksters. They've enjoyed watching my video, leaving their comments. Blocked they are. But I was able to get back and forth with one of them, and they were quoting a case up in the Northeast, Ridley versus Liu. Okay, and if you know anything about law and you know anything about tax, because if you don't, then you shouldn't be talking about this. Okay, but if you know anything about that stuff, okay, anytime you're looking at a court case, it's only in those circumstances in which it applies. We can use it as guidance. But in this case, there was a CPA that charged a contingency fee, and the court found that they were able to charge a contingency fee. They went a step further to say, well, the type of service they were providing didn't fall under the services of Circular 230. Let me tell you this, when you're preparing and submitting a Form 941X, that falls under Circular 230. What that CPA was doing up in the Northeast, okay, was not the same as this. They were not doing services related to what we're talking about here. The other part is that when we talk about somebody that's properly lined up with the IRS, they have a PTIN, they have to follow Circular 230. So you know what these shucksters do? They say, oh, no. See, we're not a tax professional. And it's like, well, then how is it that I'm relying on you? Why should you have relied on them at all? I know Oh, they told me I could get $1 million. Oh, they said 100,000. I didn't want to see the warning signs, right? I didn't want to question them wearing a mask, okay, as they walked in and they did a stick up. So when they say that to you, it's a lie, it's a fallacy, because anybody that's helping you with this should be a tax professional, starting with they're registered with the IRS. So those that then say, well, I'm not going to sign it, I'm not going to fill it out, because there's groups out there, they say, well, here's what we'll do. We're going to give you the forms. We're going to give you an example, and we're going to say, here's your numbers and put it on this line item. But, oh, gee golly, we can't prepare it for you. You know why they're saying that? Because they're actually dumb. That's how dumb they are. They don't know how to put a few numbers on a 941X. So why are you hiring somebody that's dumb? Number one. Number two, they're a liar and actually a snake. And let me tell you why they're a snake, okay? Because anybody can prepare a Form 941X. Anybody can. You can. Just the same as anybody can prepare your tax return, right? Your mom, your uncle, your dad, your grandpa, your neighbor, right? Same people that can do a 941X. Now, the IRS requires that they have a professional tax ID number or a prepared tax ID number, but many don't do it. So what I'm saying to you here is this: be on the lookout. And if you're like, well, I don't want to verify the info. I don't know if I want to make sure that this is correct. Well, you're now completely oblivious to the fact that you're 100% problematic here. So here in Oklahoma, we only had 21 days in which there was a governmental shutdown. There's a few little cities where you had a pocket of shutdowns, but mostly related to restaurants, or a partial shutdown where they were limited on their capacity. So it is not possible in the state of Oklahoma for a law practice, as an example, or a medical practice, or a dentist, or pretty much any business that's outside of those 21 days that would be able to qualify unless their gross receipts are down. And I'm telling you, I had a client, as I told you, they're getting ready to submit $1 million. And this is how oblivious they were to all of it. They didn't even realize, based on who they were dealing with, that it was related to payroll tax, as in it's something they should have ran by me. And I'm just literally beside myself. I'm like, what? How are they presenting this to you that you wouldn't know that this is in my purview? The other thing is, I told the client, we already got you the employee retention tax credit. We already got it for you. I was upset mostly because they got took. Luckily, we caught it in time. I hope so. And with that being said, they said, no. They said that if we had suppliers down, then it qualifies us. And I said, well, first of all, you guys did well, right? Your gross receipts were down. And I said, now, how long were you guys shut down? He said, well, we weren't shut down. I said, well, because why? You're an essential business, right? Yeah, we're an essential business. Were you shut down? Yes or no? No. See, what I tell you, you have a supplier. So maybe they had a supplier, okay? This total shuckster, scamster group that got in touch with my client. They probably go, oh, here's a supplier, and they were shut down. Okay. Did you order supplies from them? Did you not get the supplies? And then those are critical supplies, and then it caused your business to shut down? Yes or no? I mean, was your business closed or not? No? Then how do you qualify? So those that then get cynical, let's go right now. I want to meet you in the back. Okay? Because this is not something to mess around with. The people that are convincing you of that, they will be long gone. You will not know where they are, and you will be the one holding the bag. So when I see these increased phone calls from clients, I hear of phone calls. I have people that are emailing me, sending me footage. IRS raids are coming. Good. Awesome. Can't wait for people to get nailed so that this will end. And they all should get nailed. I hope that they get the book thrown at them, because they are knowingly scamming small business owners. And it's not enough in this environment for a small business owner, for an employer to say, gee golly, I wasn't aware. Because the IRS goes, that never works ever. It never works. Time and time again, taxpayers go to the courts and they say, well, I was relying on this person. I was relying on this person. The IRS goes, judge goes, you're responsible. But nothing. You are responsible. Okay. You're responsible. So why am I upset? Honestly, it's not so much about the scamsters per se. It's that they're actually getting through to good, hardworking Americans, good, hardworking small business owners. And there's going to be small business owners that are going to be put out of business over this. They're going to have their business shut down because when the IRS wants payroll tax, they have the most teeth. Okay. When you owe tax for an individual, okay, you have plenty of options, plenty of ways to get that paid off. When you're an employer that owes payroll taxes, there are no such things. This is where they seize assets. This is where the IRS goes, I don't want to do this, right? But I have to, because these are employer taxes. These are employee taxes. You are a trustee of these taxes, and you went and got a tax credit incorrectly. I'm sorry that you got it incorrectly, but you should have known better. I mean, here's the thing. I've got this group of attorneys that have reached out, and there's a big group of attorneys that are like, but no, this attorney got it, and that attorney got it. I said, did they run it by their own tax advisor? Because there's no way their own tax advisor is this dumb that they would allow them to get it. So this is, in my opinion, an epidemic. This is a crisis, and the IRS, rightfully so, is, according to the article that I read, the IRS has indicated that they're moving 90% of their auditors to the ERTC. That's causing there to be further delays. Now, one of the things I want you to note on the Employee Retention Tax Credit is that it is about 6 to 9 months. Who knows if it's going to get longer? But there is a massive amount of fraud here. My understanding is I was doing a seminar out in Atlanta. I was able to talk to some good folks that are kind of on the inside up in Washington, D.C. Sounds sexier than it is. But my point is, on good authority, I think we're looking at congressional hearings. On good authority, I think we are looking at maybe the Employee Retention Tax Credit potentially getting halted until this can all get sorted out. And why? Because we have people that are scamming, misrepresenting, misinforming on purpose, hardworking small business owners that see this as, okay, is it too good to be true? I'm going to ignore it because I want this money. And that's really where I'm outraged, is there's going to be innocent people that the IRS is going to go, we're sorry that you're held responsible, but you got to pay it back. And maybe they track down some. But when you think of this, okay, there was an analysis done by the U.S. Treasury that I told you about. And the number of preparers on those, this was looking at one firm, most likely, based on their contingency fee, making somewhere around $30 billion in fees, yo. Where do you think that person's going to be, right? They're gone. They know what they're doing, okay? So don't get caught up in this. It is a 911, all right? Look out for your friends. You hear people getting this, look out for them. Friday night, Amanda and I are out with some friends. And the gentleman that we're with says, hey, I got a question for you. I got a buddy of mine. He's getting ready to go take a job at one of these employee retention tax credit type businesses. They just started. They're doing this. They get a commission. They earn. And I said, what? I said, who is your friend? Because they're going to probably be ones that go down. There's pawns being hired. So there's even innocent amongst the scamsters. They don't even know that they're contributing. But guess what the IRS and the FBI is going to say? We should have known better. You can't just say, well, I was relying on this person that gave me this worksheet and I just was going by it. All this stuff is in the IRS notices. It's all out there for black and white. And when you look at it, you go, well, it seems confusing and this, that. Okay, but it's not an excuse with the IRS. All right. Hey, I want to say thanks to Mexican Iron Man. That is the name, Mexican Iron Man. Thank you for the special little added. We're going to have drinks on that. We also got Tool Daddy, which we gave a shout out to the beginning. Thank you so much to both of those. Coach is here. Coach's Pit Barbecue veteran. Thank you for your service, my friend. Oh, I'm Coach. Okay. Coach is here. That's right. Coach is here.
Everybody was saying Coach was here. So.
Well, I appreciate that. Yes, those that are new to my channel, so grateful that you're here and that you're listening in or you're watching back. But in the early part of the pandemic, there were several videos that I'd give you a heads up. And I'd say, hey, listen, I'm getting ready to really come here, but I really want you to hear me. So with that, we do have some Q&A. These are questions that have come from those comments. And so we're going to run through about 5 of them, and then I'm going to touch base with you on a couple other things. So our first question comes from Jim H. Jim, how you doing if you're watching back or here? But I did a couple of videos talking about the vehicle and the 100% deduction, and they wanted to know, should they buy it in 22 or 23 if they're expecting big income in 23? So this 100% deduction is for vehicles that are SUVs and trucks over 6,000 pounds GVWR. And this year it's 100% write-off to the extent of your business use. Next year it's 80%. The following year in 2024, it's 60%. So it's a great question because it's like, well, do I get the deduction now to get the 100% depreciation amount, or do I do it next year to get the 80% deduction, which would be less, but it's the year that I'm in bigger income? And so what I told Jim H in his comment, the answer that I gave him is that because in this circumstance, the income is going to be so much higher in 2023 that Jim, if it is for Jim or maybe Jim's client, is going to be in a higher tax bracket. So the 100% deduction of the SUV or truck this year, while yes, it would be 100% deduction, it is going to save Jim tax at the lower tax brackets. Whereas if next year he takes the deduction, even though it's 80%, that deduction is going to save him at a higher tax bracket. And the other 20%, assuming 100% business use, would be able to be taken over the next 5 years. So you still get the deduction overall. So I had said, all things being equal, if you were my client, I'd probably say, put my money on doing it in 2023 for the write-off. Our second question came from Ruben Cab and said, if you have a family-owned business, then does the family qualify? And this was related to the employee retention tax credit. So with this, you take all the family members that are owners in the business, add up all that family member ownership. Now, as soon as you're like, well, wait a minute, you have a mom and a dad. Did I say break it out between mom, dad, sister, and this and that? Did I say that? I didn't. What I said was add up all the family members. The second you hiccup there, stop hiccuping, okay? Take a drink of water, hold your breath. Are you done hiccuping? Great. You take the family, you add up all their percentage of ownership, okay? And what's the total ownership of that family, right? Pick it. Well, what is this family? Yes. Is that family? Yes. Is that family? Yes. Stepbrother? Yes. Stepdad? Yes. Okay. It's family. Okay. Add them all up. So even if you had 10 family members and they each own 10%, well, in that example, collectively, they all own 100% of the business, right? You don't even have to scratch your head. You just got to accept the fact that for ERTC purposes, the IRS says that then each one of those family members is deemed 100% owner. Okay. So if you have more than 50% ownership by an individual or combined family, then none of the family qualifies, not the owners and not the family. Unfortunately, that's how the law works on this. Our third question comes from KD. Is the SUV or truck 100% depreciation or deduction based on the net Schedule C? So great question on that, because we know that a number of things are contingent on the net income of Schedule C. We know that PPP was based on the net income of Schedule C. We know that when we're getting tax credits or the amount subject to self-employment tax is all based on the net income of Schedule C. But the actual answer is no. This is a deduction to arrive at the net income. So if you bought a $50,000 SUV that qualified over 6,000 pounds GVWR and you get the full deduction, then you're going to be able to get that deduction, and it could cause your business to become a loss. So it's not contingent on your net income. Our fourth one came from Pooh Bear. What if I got too much ERC due to IRS error? Now, again, these are questions that people are putting in the public comments. So in this circumstance, they said their ERC, their employee retention tax credit, was $35,000, but they got a check for $350,000. I said, well, and they said it was IRS error. I said, well, clearly IRS error. Immediately return the money, include a letter, and indicate that this was sent to you in error. The IRS would be coming for that. Our fifth question came from Mike L. Said, how come CPAs, EAs, and tax pros don't share things like you do, JJ? Well, I appreciate that, Mike L. And here's the reason why. You've never met a CPA quite like me. Number 6, we've got a question here. If you buy a car but owe on it, does your deduction equal what you've paid? The answer is no on that. Because when you buy the vehicle, what's the purchase price? Then that's the purchase price that you get to write off. Now, it would be the purchase price after discounts and rebates. But if you have a purchase price, that's the deduction start number. So if you bought something for 50 grand and you put 10,000 down, you had a trade-in of 5,000 and you finance the rest, doesn't matter. It's a $50,000 purchase amount. That's what your deduction would equal, assuming 100% write-off. Number 7 is Greenfire 919. Is ERTC taxable? Well, yes, because it's a reduction of your wage deduction. So it's not reported as income, but it does reduce down your deductions, which in essence makes it taxable, if you will. And here's the kicker. You got to go back and amend your return. And many of these promoters, they're not telling you that. Why? Because they're probably even aware, or if they were aware, they knew you may not get it. So long story short, it is taxable. Number 8, what we're looking at here is, what do you think of that is? Jacquees? How do you get the self-employed tax credit on Form 7202 if you were out with COVID or caring for somebody with it? So we know that the Family First Coronavirus Response Act had tax credits for employees and self-employed individuals that if they were out with COVID or caring for somebody with COVID, there could be a tax credit. And it is up to 10 days that you're out with COVID from April 1st of 2020 to March 31st of 21, and another 10 days from April 1st of 21 to September 30th of 21. So 10 days in either one of those periods. If you're out with COVID, you get the tax credit up to 10 days on both of them. And if you were caring for somebody with COVID, get 10 days in that first period and another 10 days. And then you would get this tax credit. For the self-employed, that's done at the individual level on Form 1040, on Form 7202. And what you would do now, so if somebody missed it, is you would amend your tax return for the year in which you were out with COVID or caring for somebody with COVID. So you would just amend your individual tax return. You'd file a Form 1040X, and you would include that Form 7202. And therefore, that's how you would now go back and get that credit. Number 9, we have the matrix. If a business started in 19, do they qualify for ERC? Yes, because it's any business that started before February 15th of 2020. Number 10, if we're looking at DAX the CPA, if a business started in January of 2020, do they qualify for ERTC? Yes, because it is any business that started before February 15th of 2020. Now for that, if that is a business and they have a governmental shutdown, they're going to qualify during that period. If they have a reduction in gross receipts, that's something you got to look at very carefully. Number 11, we've got from For His Glory Ministry, is the self-employed tax credit for COVID based on net income on Schedule C? The answer is yes. So that tax credit I was just talking about, well, what's the dollar amount? Well, you take your net income on Schedule C and you divide it out by the number of work days to come up with what is then your daily earnings as a self-employed. And then you simply multiply that by the credit or the number of days that you were out, no more than 10 days, no more than $511 if you were with COVID, no more than $200 a day. But have that video that it can total a tremendous amount of tax credit. So you need to be checking that out. Also, can someone who's an employee and self-employed get this credit? The answer is yes, but there's an overall max. So when an employee is out, the employer gets a tax credit if they paid them, but then that gets reported on the Form W-2 just for informational purposes. It has no effect to the employee, but it does get reported to the IRS that that was an employee in the amount of their compensation that was then used for that tax credit by the employer. So for the self-employed, they would be able to get whatever was not used up to that $511 a day. So it would require some extra work, but the answer is yes, you can get it for both. Number 12, we've got Jeff. Jeff, can you carry over bonus depreciation? He was specifically asking related to the vehicle. The answer is no, because bonus depreciation is only in the year in which you acquired the vehicle, meaning you acquired it and you placed it in service. So it's not a carryover. Now it may yield a loss that's carryover, but the depreciation itself is not a carryover. Number 13, I believe this is somebody that has a trucking company, Bartech. And what are luxury car limits for tax depreciation deduction? So we hear the terminology of luxury vehicle. And so what does that really mean? Well, it's the dollar amount. And then people say, well, what's the dollar amount? It's irrelevant, because here's what you just need to know is that luxury vehicle limits, okay, are only then vehicles that are 6,000 pounds or under GVWR. So this would be your cars. So it would not be an SUV. It would not be a truck, right? So there's technically not a limit on over 6,000 pound GVWR vehicles. Those would be your SUVs and your trucks. So if it's 6,000 pounds or less GVWR, that's a gross vehicle weight rating that the government comes up with. If it's less than, it's not so much, well, what's the limit? It's just that there's only so much depreciation you're going to be able to get each year. So what it is, okay, well, what'd you buy the vehicle for? Oh, it was $50,000, $60,000, $1 million. Okay, well, whatever. There's a maximum that you get to deduct each year. And so based on that maximum. So typically in the first year, it's going to be about $18,000 and you go from there. So it's not so much that there's a luxury limit that you need to worry about. Well, I don't want to buy a vehicle that's over the limit because then it wouldn't qualify. It's just simply this. You buy a very expensive vehicle. Well, it doesn't matter. There's only so much of it you can write off. All right, number 14, we've got Swingman 50. What if a client defaults on EIDL? I've had a number of people that inquired of this. Sorry for the circumstances if somebody is doing that. I think at the end of the day, if you default, then you've defaulted with the U.S. government. If you've personally guaranteed it, if you have collateral put up, I would assume the government would be entitled to that you put up for collateral. If there's no collateral, you didn't personally guarantee it. I don't know, but you would need to claim bankruptcy for the IRS, for the SBA to do anything about releasing it. So bottom line is that if you got an EIDL, you should make payments on it. If for some reason you're going to default on it, your payments or your business is shut down, you need to get with a bankruptcy attorney ASAP. Number 15 is CC. Can self-employed filing Schedule C get bonus depreciation on a vehicle, or do they need an LLC? They just can get it. If you're filing a Schedule C, whether you're LLC or not, you are able to get it. Number 16, we got Benjamin. So for ERC, if you have 3 owners of a business, each owning 1/3, but they are unrelated, do they each qualify for ERC on their wages, and do their families qualify? And the answer is yes, because if this is 3 owners, none of them are related, then when you add up the family ownership, well, it would total less than 51%, or it would be under the 51% mark. So with that being said, you would have no owners that are over 50%. Let's just say it that way. So if you have one owner that's a third, another is third, another is third, they're not related, then they all qualify for ERTC on their wages. And then if they have family that work for the business, then the family can be included on their wages if they met the other qualifications. Number 17, we got Max Commentator. So not a question, but sharing. They know of a ERTC scamster group in Utah, and they have filed forms with the IRS to report them. So awesome to you, Max Commentator. Number 18, we've got Michael B. Not a question, but look up one of the pop-up ERC shops, and their address is basically the IRS. Wow. Talk about somebody that's admitting that they are a scamster. Number 19, Master Wraith self-employment tax credit for the COVID, limited to the person's tax. So I felt like maybe when this person left the comment, it wasn't a question. They thought they were one-upping me and they left it as a statement, maybe. I don't know. But what it doesn't matter is that this is a refundable credit. So that credit I was telling you about, if you're out with COVID or carrying COVID and you're self-employed, okay, it's a refundable credit as though you paid in that money. So no, the credit is not limited to your tax. So whatever that credit is, that's the money that you're getting back. Now, if you owe tax, it'll offset it. All right, number 20. We've got Sarah got an EIDL for 25 grand. It was when it was first offered, and things were in a panic. There was a lot of unknowns, so they went ahead and got it, but they went ahead and paid it all back because they didn't need it. Now, what I didn't appreciate, because I deleted their comments after I told them off, there were some people that were basically criticizing Sarah, saying, well, you shouldn't have got the EIDL. Okay, get out of here. Get out of here. You're obviously not a subscriber. So I gave you my peace of mind in a very polite, full, and gentleman way, and then I blocked you. With that being said, good job to Sarah, right? We were all in a pandemic, okay? Now, maybe some didn't believe we are and some believe we were, whatever. I'm not commenting on that other than to say there was uncertainty, okay? Even if you're the one sitting there and you're like, there's no pandemic going on. Well, if everybody else thinks there's a pandemic, then guess what? There is, okay? Meaning there was uncertainty. So don't feel bad if you got the EIDL. Now, there was, I think, 3 people that commented, and they were saying, oh, well, you had to pay interest on that, blah, blah, blah. It's like, well, do you buy insurance? I mean, are you that dumb of a person that you don't buy insurance? Why do you buy insurance? Well, in case you need that to pay out. What do you pay for insurance? Premiums. Well, you must be dumb if you get insurance. Well, right? So what I'm pointing out is, somebody gets auto insurance, do they get it and then go, man, I hope I get in a car accident right away so this thing pays off? No one gets auto insurance hoping they're going to get in an accident, which means that you could then say, well, that person was dumb because they went and got insurance and they weren't even expecting to get auto insurance, or they weren't expecting to get in an auto accident. What an idiot. Get out of here, okay? You lack intelligence, okay? What I'm getting at is, good job, Sarah. There were plenty of clients that I said, hey, listen, if you think you need it, then go ahead. But when we get a little past this, then you need to pay it back. That's where I took the stance as well. So why am I going on about that? If you got it still sitting there, get it paid back. We're past this, okay? Hopefully you are. Get it paid back. It's not something that you want sitting there. It's going to affect your credit, and not even in a bad way. It's just that it's now sitting on your books. You owe it. All right. Good job, Sarah. I'm just here defending Sarah. That's what I want you to hear. I'm defending Sarah against these goofballs. All right. Number 21. We're going through these pretty fast. I'm pretty impressed, Amanda, I have to say.
I didn't want to jinx it.
Yeah.
But, I did want all the OGs out there, all the OGs that are on tonight, you're going to all realize that JJ has probably never answered questions this long. And I will even say, whenever I saw there were 21 questions and then he had all the other stuff and he said we were going to be on for about an hour, I was like, oh my gosh, but you're doing amazing.
Well, thank you, Amanda. So to round it out, Tammy was out with COVID in 22. So she wanted to know, would she qualify for the sick credit? Unfortunately, no. The tax credit that we were talking about earlier for the self-employed, also for the employees, is only from April 1st of 2020 through September 30th of 21. So it's only during those time periods that if you paid an employee that was out with COVID or caring for COVID, that you could get the credit. Of course, max 10 days in those 2 different threshold period of times that I told you about. And then for the self-employed, it's the same time period. So even if you were out with COVID in 4th quarter of 21, unfortunately, you won't qualify, and it won't qualify if you're out in 22. But again, if you just realize that you can get the credit, you can go back and amend that. So what's the plan here, Amanda? My thought process here is that we will start going live more. But I do want to say thanks again to Mexican Ironman for being so generous. It looks like Mexican Ironman, did you do it again? Did twice? Well, you're so generous. You know, Mexican Ironman, I think we met on Twitter. And I know Mexican Iron Man has been so gracious to leave wonderful comments that were not even asked for, but wonderful comments about the ERTC. So thank you for that wonderful comment. I really appreciate that, and much respect to you related to that. Yes, yes. So we are going to be going live again more often. I will tell you this, next week is Thanksgiving, so I hope you all are set to have a good week. Amanda and I are actually going to just be out of town for about 2 days, and it will fall on that Monday. So we won't be live next week, but the plan is for us to get back live. And I dare say this, I plan on being live each week during tax season, because really what I want to make sure you're all aware, and one of the reasons I wanted to go through all those videos, Amanda, if you don't mind just throwing up those thumbnails, just kind of bullet point through these thumbnails of some of the videos that I was telling everybody about, is that while you have come to my channel for PPP, the EIDL, and the ERTC, which I love putting out that information. You know this, right? If you're here, especially, I've got 30 years of experience in tax. Okay, I've had my own practice for 25 years, and I'm now in the twilight of my career, and I'm so enjoying it, loving working with my clients. And from that perspective, I really want to make sure that we're continuing to grow this channel in a way that really will help that small business owner. Starting with, I've got these 4 seminars. Probably if you made it to here, you're already familiar with this, but I've got 4 seminars that you get instant access to. So these are seminars that I put together for a group of tax professionals or anybody that came to the live. I've recorded it, but now I'm giving you access to watch. It's 2 hours on the small business tax update, 2 hours on the individual tax update. You're getting the ERTC complete seminar of 3 hours, including all of the materials. And I've created now a brand new 2 new videos that are not available online. One is 1 hour, one is 40 minutes. And I walk through how to prepare that 941X. You add them all up, it was $488. But you now can have access to it for $197. I'm going to be adding soon, so even if you bought this, you're going to see it added as a benefit whenever I release it. But I'm going to be doing a special year-end tax planning seminar that I'm going to announce that you can attend live on a Zoom. And if you attend live on the Zoom, we're going to do some Q&A on that, and then that'll be available to you as well. So all that to say, let's continue to be growing this channel together. I so appreciate the friendships that we've gained. Many of you, I so appreciate you coming to check out videos. Some of you I know have watched plenty of videos on ERTC. And because I've gotten to know you, I know you got ERTC. You already got the money. You got it properly. I may have helped you a little bit related to that, but you still come in and throw a view up and nice comments. So I really appreciate all that. But be sure to be checking out my other videos. I don't have a lot of views on some of these. That's okay. But I am trying to put together several kinds of videos. I know I did a little, what do you call it? I did a little poll the other day, and I said, do you want JJ the CPA to do shorts? The short videos, yes or no. And then there was I hate shorts. So here's the thing I just want you to know. I'm sorry if you hate shorts. I'm going to do some every once in a while, but look at the shorts that I do at least. Okay, I'm not going to be falling down and then showing you how I did something funny or goofy or showing you something that's, silly. If I do a short, it's just going to be a quick amount of information. So I did one today about charities and why you should not write off a charitable contribution. You should call it a sponsorship. And I did it in a minute. So that's just really what a short is. Let me tell you this, YouTube is really promoting the shorts. They're telling us, and so I get it. Maybe you're just somebody that doesn't like the shorts. Well, I don't know how you turn them off. It'd be nice if you could. But really what the YouTube is indicating is that that's a way that they're helping a channel grow, is if you're doing some shorts, then they're introducing that. So if I don't do any shorts, my channel doesn't grow. Why do I care if a channel grows? Because I actually don't make any money based on the number of subscribers. Well, I'm a CPA. I like numbers, right? It just tells me that I'm putting out good information. So I'm so pleased in the last month, we've been gaining We gained over 1,000 subscribers. We've averaged about 750 new subscribers every month. I'm really enjoying this channel. I'm enjoying you. I'm enjoying putting information out there. So thanks for being here. Thanks for tuning in. Thanks for watching all of these different videos that are out there. And in closing, just make sure that if you got friends and they're telling you about the ERTC, okay, they're telling you about the ERTC, that you're looking out for them. Oh, one last thing, okay, I saved it to the end. Yep, click on it. I'm on TikTok. Yeah, don't hold it against me. Okay, don't hold it against me. Don't unsubscribe because, oh my gosh, JJ the CPA has got on TikTok. Okay, here's what I say. Everybody needs a little JJ the CPA, right? And there's a lot of young folks, starting with Amanda's son, my son, so Shane and Cooper. Now, Nick, he watches a lot of YouTube. But what I'm saying is, or YouTube Shorts, is on TikTok, there's plenty of people out there. So I'm not making any money on TikTok. I'm putting together things that are different, but it's good information. So why do you care if I'm on TikTok? Well, I'm just admitting it to you, right? I am Joshua Jensen. I'm a CPA, and I have videos on TikTok. So I'm just admitting it to you. But the other part is there are some people that are like, hey, I like being on TikTok. You know what I don't like about TikTok is that I get on it and then I realize 2 hours passed somehow. I just went through some time warp watching 30-second videos at a time. All to say this, if you like the short videos, I'm not going to do that many shorts on YouTube. I might do one a week. I'm going to try and make them impactful. But if you like the shorts, you like the 1 minutes, okay, well, then check out TikTok. I've got one that I think we're up over 72,000 views. It's just fun to see the numbers. I'm not making any money there. Not riding on a skateboard to some cool music. And then now a truck company wants to give me their truck.
Well, Mexican Iron Horse said he wanted to see some JJ TikTok tax dance booty videos.
That's Mexican Iron Man. You said Iron Horse.
Oh, did I say
Mexican Iron Man.
Sorry, Mexican Iron Man.
Yeah.
I'm so sorry.
Yeah. Well, see, I'm Captain America.
Yes.
And he is Mexican Iron Man. All right. Well, with that, we're going to close it out. Hey, thanks for tuning in. I'd love it if you subscribe. I love you. I appreciate you. Thanks for being a part of this. So wonderful to see so many on the live. Thanks for rewatching. Thanks for all the support. We're going to finish out this year strong. We're going to set up for a great 2023. We're going to do it together. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You all have a great one. We'll see you soon.
American CPA.